All right, so good afternoon to everybody. Good morning, good evening to those that are in other countries. So let's start here with the disclaimer. Today's Saturday session is for educational purposes only and merely ideas given by me and Coach. Nothing stated during this Zoom session should be taken as an indication to buy or sell. Nothing stated in the Zoom session should be seen as investment advice. If investment advice is needed, I ask that you please contact a registered financial advisor or fiduciary. Like I always say, if you need financial advice, financial advisor. All right, so with that being said, let me pause the share. So today what we're going to be talking about is day trading. I know a lot of people have been asking, hey, Ty, can you talk about day trading? We want to make money every day. We want to make money every week. We're cool with the long-term investment. We're cool with the long-term trading. But how do we supplement our income? So with that, you have your day trades, you have your swing trades, right? And I tapped into Coach. He'll talk in a minute. He's a day trader, and I liked a few things that he was saying, on the side and in the Facebook group, and he's pretty helpful, right? So hit him up and was asking him if he could talk to y'all about his philosophy and how he day trades and what he looks at when he does day trade. So with that being said, Coach, if you can unmute yourself and talk about you and what you do and how you trade.
Yeah, thank you, man. Can you hear me? Can you hear me?
We can hear you.
Okay, perfect. So I'm Coach. I pretty much live in the shadows in the background. I don't really do too much, announcing of what I have going on with regards to day trades. But here I am. So I've pretty much been day trading for about a year now. I'm by no means an expert, but I'm an expert of knowing what not to do and also understanding that day trading is more than just trying to make money. It's a mindset. That should be the overall goal that you should take when you decide to enter into a trade. Now, let me preface this first before questions start to come in the chat. What I'm going to do is I'm going to give you my overall framework of how I measure or take trades, and then I'm going to transition into showing you a couple examples of day trades I made this week and give you the analysis behind why I took the trade. And after that, then if you have any questions, we can go over it. So the first thing that kind of helped me get to the level I am now is repetition, with knowing all of my candlestick patterns, knowing my chart patterns, just going back and watching the training videos over and over and over again until it stuck with me. And then also looking at real-time data during the daytime so I can understand my levels and my overall chart movements. Another thing that helps me a lot is having no distractions at all when I'm getting ready to day trade. So what I mean by that is I have my phone in the office with me, but I put it on do not disturb because I don't want to be interrupted. And I wanted to have a clear mind and a clear head. That way I can just focus on what it is that I'm trying to accomplish for that one day. So it's kind of like if I'm ever in a funk or like in a bad mood, then I won't day trade that day because I believe that I won't have the mental clarity to be able to identify the minimum risk and the maximum reward I can make for that one trade. I also established a criteria of having no more than 3, maybe 4 trades per day. Because you don't want to, the last thing you want to do is overtrade your account. And I've done that before where I've placed like 10 trades a day. And the only thing that does is I ended up blowing up my account. What else? For every single trade that I make, I risk no more than 20% of my total account balance. So for example, if if I'm starting off with $1,000 account balance, I'm not going to trade no more than $200 for that entire day, whether it's in one trade, whether it's in two trades, or whether it's in four trades. I'll have to break it down into $100, $200 for one trade, or if I'm taking four, I have to break it down by no more than $50 per trade. That way you can protect your account and continue to move forward and prevent any losses, any substantial losses to your account. Also, I don't sit in trades long. I don't hold the bag, like meaning if the trade goes against what I predicted what happened based on my technical analysis and the chart patterns that happen, I just go ahead and set a stop limit. And if it hits the stop limit, then that's it, I'm out. I don't re-enter the trade. I don't hold on to the trade for longer than it needs to, because that's how you end up blowing up your account. Like kind of like hoping that it goes in the direction you want it to go, but that's not how the market moves. The market owes us nothing. So really you have to respect it, and you have to look at it and treat it and give it its proper respect. And the last thing I do that helps me out tremendously, I front load the work and my analysis before I ever even decide to go into a trade. And what I mean by that is I chart out my support and resistance levels. I look at the chart patterns to see what the overall trend is, if it's a bullish trend, if it's a bearish trend, et cetera, et cetera. And then that lets me know what the market sentiment is going to be before I even enter into a trade. So to sum it up, before you even take any trade, you need to know, one, your entry point, when you're going to take it, when you're going to buy the entry. You need to know your stop limit. And then you also need to know your profit target. You have to have an understanding of what those three things are before you even take it, because if you don't, that's how you can end up with one, blowing up your account, and two, having the trade go against what your established criteria would be for that day. Now, when it comes to identifying tickers and making a watch list for the trades that I'm gonna go in and out of, I establish a criteria, and I'm going to give it to you now. And this is pretty much what I stick to. So the stock has to be at minimum at least $20. It has to have a market cap of at least 1 billion. The volume for the stock should be 500K for liquidity purposes, because when I'm taking a trade, I need to be able to get out of that trade in the event that I make it. The spread, what I mean by spread is the price between the bid and the ask. I don't want it to be I want it to be between 1 and 10 cents. Ideally, I mean, a couple years ago, it used to be more favorable spreads, like maybe 1 to 5 cents. But now the market makers have pretty much, got it a little bit wider. So I mean, 10 cent spread isn't that bad. But if you're looking at the stock and you see the bid is at $1 and the ask is at $2, then 9 times out of 10, I would recommend you don't even take that trade, because you're going to be 90 cents in the hole before you even before there's a potential for you to make profit.
Hey, Coach. Real quick, my question for you with the spread, do you do that because you do market orders, or you still do limit orders?
I do both. So I would do a limit order if I'm trading the equities, right? And I would do a market order if I'm doing calls for that day. So when it comes to day trading, for me, if I'm buying calls, I only buy the weeklies, the weekly expirations, because I don't care about, going down the option chain and looking at and trying to buy time. That's not the objective here. The objective for day trading is you want to get in a position and you want to be out of that position within 30 minutes or less. Sometimes I can be in a position for 8 minutes. It just depends on the momentum of the move that I'm looking to carry out. So for example, if I'm looking at let me show my screen so I can show you. Can you see it? Can you see Netflix?
Yeah.
Okay, perfect. So for day trading, if I'm looking at the option exchange for the weeklies, right? And I see this 180, what is this? This is square. If I see the 187.5 strike price, and I see that this spread to buy it is 15 cents, I'm fine with that. I have no problem buying this option call right here at all. Now, what I'm not gonna do is go down further to look to buy time, because one, is more expensive because you got to pay for the time. And for two, I'm only gonna be, like I said before, I'm only gonna be in this trade for about no more than 30 minutes. Now, let me show an example of a horrible spread. If you look at this ticker, HUBB, at the 145, no, at the 150 strike price, even if you do your technical analysis and your charting, and you think that by the end of the week or the day based on momentum, you think that the price of this stock is going to go at the 150. If you buy this stock, you will have to get in at $10. So that's what, $1,000, right? However, but the bid is at 0.5. So that's a very wide spread, and you're already in the hole damn near $900 before you can even see a profit. So when it comes to this, even just looking at it, I don't see no open interest. I don't see any volume here. So this would be a stock that I would never ever use for options trading. You want to find stocks that have a lot of liquidity, like the SPOT. The SPOT is a great stock that you can use. Let me pull it up. Look at these weeklies. Look at the spreads. It's 4-cent spreads on the 347 strike. It's a 3-cent spread on the 348 strike. And look at all this open interest and the volume. So that lets you know that once you get in this trade, you should have no worries about when you sell, whether it's a limit or a market order, you have no worries about your order being fulfilled at all. Did that kind of answer your question with the spread?
Yeah, that's good.
Okay, perfect. How do I want to transition? All right, going back to my criteria, I do $20 the stock price has to be a minimum of $20. The market cap has to be at least $1 billion. The volume needs to be at least 500K. The spread needs to be between 1 and 10 cents. Sometimes it'll be a little bit more than that, but I'm fine as long as it's not outrageous. And also another indicator or criteria I look at is the ATR, which is the average true range of a stock. It's basically an indicator that shows how much an asset moves, like on average, during a given time frame. I believe it averages up the past 14 days of that stock. And the minimum ATR for me, it has to be between $3 to $4 at minimum. So if you look at my watch list over here, you'll see I have my tickers. These are the tickers that I normally day trade every single day. If you look here where it says ATR for Apple, for instance, Apple is going to move over the past 14 days. It's going to give you a movement of $4 in either direction, either going up or either going down. Same thing with Microsoft. It'll be $5.45. Baba will give you $8.01. It just all depends. You need to do your technical analysis and your charting first before you can ride that momentum in whatever direction the technical analysis is telling you the stock is going to go in. Like, so before any trade you take, you have to know your entry point, your stop limit, and what target you're going to place for your profit taking. Now, for me, when it comes to taking profit, I pretty much aim for a dollar price move in either direction, going up or down. Meaning, if the stock is at $10, I'm going to take my profit at $11. If I'm buying calls, if I'm buying puts and I get in at $10, I'm going to take my profit as the stock price goes down to $9. As far as my stop loss is concerned, when I enter into a trade, I'm going to use a 30 to maybe 40-cent stop loss. That way I minimize how much of my loss is going to be if the trade goes against me. What else? Also,
hey, Coach.
Yep.
All right, 2 questions. Somebody asked, what scanner do you use? And then somebody said, how do you set your stop loss?
To answer the first question, I don't use a scanner at all. I just pretty much, based on that criteria that I established earlier with the $20, the market cap at least $1 billion. That's how I just found my watch list. Or what you could do, you can go. Let me see. You can go to Market Watch, and this is the Thinkorswim platform. You can go to Market Watch. Why is it not? You can go to Lovers Losers, and it's not loading for some reason. But yeah, I find my tickers here, going to Market Watch and going to these pre-built scanners and Lovers and Losers. I usually just look at the post-market movers and the pre-market movers, and that's how I kind of find what trades I'm going to look at for the day. And the next question, which with regards to the stop loss, let me pull up the chart. So let me see. If I'm looking at, so when I'm day trading, I'm looking at the 2 and the 5 minute time frame. I use those as my points of entry. So if I'm looking at Netflix, for instance, right? If I think, yeah, this is good. This is a good one. So if I think that, how do I get rid of this? Okay. If I think that, if I have a short bias for Netflix on the day, and I think that this level right here of 547.25 is going to go lower, I'm going to place my entry into the stock on this candle. This candle right here, where this oval is, that's my entry. My stop loss is going to be 30 cents from that point. So it'll be right around here. I don't want to see it go past 547.91. If it goes past 547.91, I'm automatically out of the trade. It's no love lost. It was a calculated risk, but look at the reward I received from that just by staying in that trade. It went from 547.13 all the way down to 545.05. That's a $2 move. And in option trading, that's a huge move. And this all happened within 2 minutes. So once I get my exit down here, I'm done for the day. And that's pretty much how I know what I'm going to do in terms of my stop loss, my profit taking, and my entry. Did that kind of answer the question?
Yeah.
All right. Now, the things I'm going to go over next, they all, in my opinion, they all require their own individual session, and that can go for an hour to 2. But I'm going to give it to you as a framework for what you can find for some sort of supplemental, I guess, education. That way you can continue your journey when it comes to learning how to day trade. It's pretty much, this is your foundation, and this is what you're going to use to incorporate with the market structure all together to have a higher probability of the trade going in your favor. So one thing is candlestick analysis. You need to know the patterns, what they mean. And you don't necessarily have to know the name of each candle. Like, you don't need to know that this candle is called a hammer. You just need to know what it does when you see it. Also, you need to know your technical analysis. What do I mean by that? You need to understand your up and down trends. The uptrend is the technical uptrend definition is a higher high and a higher low. The technical definition of a downtrend is a lower high and a lower low. You also need to know how to chart out your support and resistance levels. That's extremely important, so you can see how the stock price is going to move within a particular channel, and how you can pinpoint what your entries is going to be into that particular day trade. What else? You need to know your chart patterns. You need to know what is a reversal pattern, what is a continuation pattern. It could be either a bullish or bearish reversal. So for example, something that would be considered a bearish chart pattern will be a double top, head and shoulders, a triple top. And these are all names I'm sure you all have heard before. You just don't quite know what it means. A bullish chart pattern would be a double bottom, an inverted head and shoulders, or a triple top. One of my favorite chart patterns is a flag pattern. Those are one of the easiest breakout trades as you can see. And let me show you an example of one. Let me put this up. What day is this? This was a trade I made on the 15th of October. The ticker is FSLY. The 15th, here we go. Boom. So for FSLY, this was a flat top flag breakout pattern. Even though the price of this stock dropped post-market, I was able to see the breakout pattern for a move higher starting to form. As the price pushed up towards $89, which was already established resistance level, that was my trigger to go ahead and buy the calls. And they were priced at about $1.80, $1.98 per call. And my exit up here at the 92 level, it was about what, $4. So this was a $400, a 200% move right here. So as the candlestick opened, I knew that it needed to get beyond this 89 level before I even decide to take it to a higher level. So on the second candlestick, it breached it, but it didn't. On the third candle, it came back down into this next channel. It came back down into support. And then I saw on this movement right here, this is a flag pattern forming right here. I knew then that there's a higher probability that it'll break out of this 89 resistance level and go higher to this next resistance point. And this was my exit. So that was the reason behind why I traded FSLY.
Can I ask a quick question about the resistance?
Mm-hmm.
How did you get the 89 resistance level?
Good question. So what I do is when it comes to charting out your support and resistance level, I literally start at, I need to see the forest through the trees. So I have to start at a higher time frame and then drill my way down. What I mean by that is I chart out my support and resistance for the monthly. Then I chart out my support and resistance for the weekly. Then I drill down further and chart out my support and resistance for the daily. Excuse me. So going to the monthly time frame for FSLY. This is not clear. Let me give you another one. Netflix, right? So this is a clear chart. Let me remove this. So looking at the monthly chart on Netflix, in order for you to identify your support and resistance levels, you should look for at least three points of where the support and resistance could, touch. So for the resistance level, if you look at this current month's candle, the close or the low is 501.70. You go over to the next month, the close is 500. You go over to this month, what is this? Yeah, you could use these areas right here because you have about three. You have about 3 points where they all touch. So you could use this for current price levels as your support. So for the monthly, I changed the color to blue, just so I don't get confused when I'm looking at it on my charts. As far as resistance, you see these top and tails, these wicks up here, you can use these as your resistance levels. This was the all-time high of 575.37. Prices did not go above that. You can see it touches two areas. Boom, there's your monthly resistance right there relative to current price levels. Now, let me change the color. If I was expecting this stock to break this monthly support, then the next level of support would be here. right above this. What is this? This is the 9-day simple moving average. And at the bottom of this tail, and at the open of this candle right here, this will become the new support if it breaks below this level. Let me remove it. But right now we just focus on current price levels. So once I get my monthly established, I drop down to the weekly. So now it's clear. I can clearly see what's going on. So this level right here, I would use as weekly resistance. Then I change the color again. And I would use this price level 1, 2, 3. Yeah. I will use this price level as my weekly support. Then I will drop down to the daily. For this, I will use, you see this, there's a gap right here. I will look left and try to find 3 points. So 1, 2, 3, boom. Yeah, I will use this level right here as my daily support. So when I'm looking at my price movements on a lower time frame, like say the 5 minute, it's easier for me to see what's going on during the daytime, just based on me taking a larger view, a wider view. So looking at this, I know based on let me just analyze Netflix. I know based on this opening candle, I personally would have a bearish sentiment. However, I wouldn't get into this trade until they bring it down below this 50 moving average. So as you can see, as it opened up, the sellers are in control. However, then the buyers came in and took it up above this weekly resistance point. Then the sellers came back in on this wick right here and brought it back down. And once it breached this 50-day moving average, that will be my entry point. And then you can just pretty much set your stop loss at the top of this candle, which is, what is this? 548.48. That will be a stop loss. And as long as it doesn't breach that, you can just continue to ride the momentum all the way down. And this would be a great exit. This point right here would be a great exit point. However, again, like I said before, I only look for $1 movement. So if I got it down to here, I would have got out. That's well over $1 move. If you want to continue to carry momentum, you can still go, because remember, you have this daily support level here of how you can identify what the stock is going to move to. So that's how I use support and resistance.
Okay, gotcha. Appreciate it.
Okay, what else we got? Let me show you another example of a trade I made this week. And this was another bearish trade. It was on Disney. So for Disney, this happened on the 13th.
Hey, Coach, on this one, can you show them what an entry point looks like? Also,
what do you mean by what it looks like?
So the last one, you was talking about how you would wait until it went under the 50-day moving average, right?
Right. Yep.
So for all of your day trades, are you waiting for it to go over, I guess, the moving average? You waiting for it to cross a support or resistance line? Like, what are you doing?
Yeah.
When you get in?
Yeah. So usually when it comes to using that's why technicals, knowing technicals and chart patterns and what candlesticks do is so important for you to anticipate how the stock is going to move in either direction, going up or going down. So with the previous example for Netflix, looking at the 5-minute chart for your entry, I knew that once it breached below my weekly support level, I can already anticipate a movement down, especially if it breaches this 50-day moving average, which is strong. It's a very strong wall of support, right? That didn't happen. It didn't bounce off of it. It kind of continued through. So when I seen that, I automatically set my entry on this candle right here. What this oval is, that was this was your entry at the bottom of this candle, of this wick. And again, I placed my stop loss up here because I didn't want to see it breach this level at all. So you get in, it consolidates for a minute, and then it just continues to roll lower. And the only way you're gonna know how to do this is if you, one, put in a repetition, and two, understand candlestick analysis, the patterns and what they mean, your technical analysis, your up and down trends, the support and resistance, and also your chart patterns. And then you just kind of have to put it all together for you to make an entry point that makes sense. When I say make sense, I mean where you minimize your risk and you maximize your reward. Because just looking at this, let me see if I can clear this. If I clear it and you're looking at a blank slate, you really wouldn't know what to do here. Because if you got in on this candle thinking that it's going to go higher, if you see it ran into the 50 moving average and then it came all the way back down. If you didn't have your stop loss set, you'd have lost a lot of money anticipating it to go higher. So that's why I say it's important to know what the chart patterns mean, and also your technical analysis and what each candle means with regards to how you're going to get into a trade. And it's
Mr. Coach.
Mm-hmm.
Can I call you Coach?
You sure can.
Okay. The Netflix chart that you're on, where you had your stop loss, can you put the oval back there? Because it looks like the third green candle before it hits the 50 line, yeah. It looks like it's over your stop loss. Like when you entered the trade and when you had your stop loss.
Yep, it was right here. So that was my stop. This was my entry. Another thing, I'm glad you brought that up. So one thing that I do is I account for slippage, which means that if the price moves against me and it's coming up against a major moving average, I won't necessarily put it at the exact number. Like for this candle, the exact number was 548.48. What I would do, I would set it up maybe 20 cents higher than that. That way I can account for the slippage. So if you look at these next few candles that formed on this green candle, this doji right here, the high of that was 548.77. My stop was at 548.80. So it never hit my stop because I accounted for slippage in order for it to continue to follow through. Does that make sense?
Yes, thank you.
Let me give you another example. Disney. This was on October 13th. All right. So doing my, pre-market analysis for Disney, I already had a bearish bias for this particular stock, meaning if it breaks this support level right here of 129, then I'm gonna go ahead and short the stock, and my target will be at least $1, or you could kind of ride the momentum until a reversal candle starts to form. So this morning candle as it opened was green as it opened. But remember, even though it's green and you want to short it, you can't short this stock until it hits your predetermined level. So it opened up green and went all the way up to 130.88. The next candle that formed was a large engulfing red candle. That basically if you see anything like this that forms, that tells you that sellers are in control because it's overtaken the previous candle. So that's a good sign that the movement is going to go in your favor if you have a bearish bias towards this stock. So I'm not shorting this until it gets to my level. If you want to be aggressive, you could have got in up here somewhere in this candle. But me personally, I stick to the script, as Mark would say, and I'll wait until it hits my level to where I feel comfortable for it to break. So as it moved to the third candle, I anticipated that it was going to go lower. So I got in here where this oval is, which is right around 129.64. Again, my stop loss is going to be maybe 30 cents higher. I don't want to see it go above the close of the first candle, which is 130.81. I don't want to see it go above that because that would mean that it's pretty much giving me a bullish sentiment. So I set my stop loss there. And then when I place my entry, I already have a target price of where it's going to go based on pre-market analysis of looking at the resistance level. And how do you find that? You just look left. Just look left and you'll see it. Hold on, let me see. Let me zoom out. Let me extend this. Boom. There's a level right here. And there's another level up in this area too. So you already know that based on looking at the pre-market analysis, that it could possibly go down to 128. And that should be your exit point. You shouldn't expect it to go any further than this. And all of this happened in 5 minutes. So my entry, I got in at what, 9:35 or so. Then I was out by 9:40. And this is a $2 move. And you're done.
All right, so 2 more questions. One question was, can you go over an example of showing how you do the weekly, monthly support and resistance lines again?
Mm-hmm.
And then another question was, before you leave off of Disney, says, why were you bearish on Disney going into the opening?
Okay. Let me see. I was bearish on Disney going into the open because looking at this pre-market right here, this gray area, I see that they gapped it below the 50-day moving average, right? So how do I want to explain this? So institutions usually buy or sell their stocks normally at the 50-day moving average. So I know that anything that gaps below or goes below the 50-day moving average, I can go ahead and have a short or bearish bias against that stock, and vice versa. If it goes above the 50-day moving average, I can pretty much have a bullish bias against buying that stock for a move higher. So if I'm looking at it at pre-market, this was around maybe 9 o'clock when I started looking at this. I see that it gapped below the 50-day moving average, and the trend, you can just look at the trend. It was making lower lows and lower highs, lower lows, lower highs. It's just trending down until it came down to this support level. Now, when it came down to the support level, it bounced off of it and went higher. So my mind went, okay, if I can want continuation for this to go lower, I needed to break the support level of 129.27. I'm not taking this trade based on pre-market sentiment of it being bearish unless I get continuation below this level. And when the market opened up, It went higher. Then it came back down. You got a large red engulfing candle. That's pretty much, anytime you see this, that's your signal to say, okay, sellers are in control, because this large candle is overtaking the previous candle. And remember, based on my analysis, I knew, hey, as long as it breaks this support, I'm going to ride it. I'm going to ride it down. In anticipation of that, I got in on this candle, on the third candle, and then just rode it all the way down to 128 and got out. Did that kind of answer your question for why I thought it would be bearish as it opened up?
I'm gonna say yes. Yeah, it does. She said yes.
Okay, cool, cool.
And then when you do the support and resistance lines, can you do it on Amazon? Because somebody has a question about Amazon.
Mm-hmm.
And while you're doing that, the question was pretty much, can we look at Amazon, because they had a big red candle, but it went right back up.
Okay. Oh, you're talking about at the close of Friday. Is that what they're referring to? I think so. All right. So for Amazon, the same concept applies. I would look at the price. So when I'm setting my monthly support and resistance, I look at the levels relative to where price is currently at right now. So I wouldn't worry about looking down here because it's not there. So this level right now for day trading, I would use this level. Hold on, let me change this. I would use this level right here because you got at least 3 points that touch as my support. I would change my color so I can easily identify it. Then I would go and chart my resistance level. I would use this area right here. Because you got 3 points that touch. 1, 2, 3. Change the color. Then I would drop down to weekly, a weekly time frame. I need 3, 1, 2. I will use this area right here as my support on the weekly time frame. And I will also use this area for my resistance for weekly. And remember, all of this will help you not only with day trading, but also swing trading as well. It's all the same. I just use a higher time frame so I can get a clear picture of what's actually going on with the movement of the stock and understanding the levels and how price reacts to each channel. Now, once I plot my weekly, I would drop down to the daily. And you see this gap, there's a gap right here. So I will make note of this gap. Matter of fact, let me remove this. I would put this somewhere on the chart to let me know, hey, there's a gap between the high of 3288 and the low of this candle, which is 333955. Okay, that would be my indicator to let me know there's a gap. As far as support and resistance, I would use this level right here because you have multiple points. 1, 2, 3, 4, 5, 6. Like you have like 7 points. I would use this as my resistance for the daily. Let me change this. And I will use this level right here for my support. So when I drop down to a lower time frame, like the 30-minute or maybe the 15-minute, you could easily see how these candles react to each price level. Let me drop it down maybe to the 5-minute. Oh my God. All right, there we go. Wow. So for this day, what is this, Friday, the 16th? So on this day for Amazon, I would automatically have bearish sentiment on this. It would be for two reasons. One, because it gapped below this daily support area. That's one indication. Another one would be because they gapped it below the 50-day moving average. And then what else? And then they actually gapped it down below the 200-day moving average. And it was just trending lower every single day. If you want to get a great look of what's actually going on as the day progresses, you want to use something called multiple time frame analysis. And all that basically means is you're going from a 2-minute or a 5-minute or even a 1-minute chart to a higher time frame, to like a 30-minute or hour. So you can easily identify like what the stock is actually doing as it moves through a channel for that day. So in regards to Amazon on the 16th, on Friday, if you go to an hour time frame, you can clearly see that it's in a downtrend. It's more clearer to look at this and notice that it's in a downtrend versus looking at it on a 2-minute chart and trying to figure out, okay, what is my entry point going to be? Because as you can see, it's very noisy, it's very loud, right? It's a lot going on. But when you go to a higher time frame, as the day progresses, like say around 12 o'clock to maybe 1 o'clock, you want to start looking at it from a higher time frame, for your hours or maybe 30 minutes. So you can clearly see what it's doing as far as a trend that's developing with this stock. So for this, if I miss the entry in the morning, what I would do, I would come back maybe around 1 o'clock and I would set my levels for intraday trading. So I would say, hey, if Amazon breaks the low of this hour candle right here, if it goes below this, oh man, let me see. If it goes below this level right here, which is, what is this, 3,343, I would place my order entry to get in if it breaks that level. And you see on the next hour candle, it broke it. And then it just continued to go all the way down. Now, when you go down to the 5-minute chart, you can clearly see how it broke down and how it happened. It bounced off of it, and then it broke. Did that make sense for Amazon? And then also, I didn't even mention this, it also went to fill the gap. It filled that gap that we already identified prior to this rectangle area. This gap was filled. But then I don't know what caused it to just take a big dump prior to market close.
Bezos probably sold everything.
I don't know how this candle formed. I have no idea. Like a big institution, this is an institutional buy order, sell order right here.
Or his ex-wife took some money out.
Something. Yeah, she cashed out, boy. She cashed a check. Because a retail trader is not going to make it drop that low. That's a hell of a drop. Jesus. But yeah, as you can see, just looking at the hour chart, man, you can already tell that it's in a bearish sentiment because it's a downtrend. You got your lower lows and your lower highs. So that's how I would have played Amazon. And then there was a gap that it was going down the field, and it filled that gap right before market closed.
So one quick question. You sort of hit on it earlier, but somebody asked, do you set your stop loss and do you take profit strictly off of just the stock price? Or do you take, so I know you let me say it this way. I know you set your stop loss off the stock price. but do you take profit off of just the stock price or off of the actual option price? So I know you said you wait for it to go $1 up or $1 down in either direction. Is that $1 up and $1 down in either direction just off of stock or actual on the actual contract?
It all depends. Like for example, if I'm in a good mood and I'm getting jiggy with it, like let me pull this up. If I have this screen up on if I have the option chart up, hold on. If I have this option chart up, let me get rid of this theoretical. I don't care about that. Then I could kind of see what's going on. Hold on, wait a minute. Go to the hour. All right. So this day right here, this is the option for that one day for the 16th. So I can kind of see if I'm in this option, all right, I can kind of see how the price is going to move based on my entry point. Now, me personally, I would never ever day trade Amazon because the options are crazy, for one, and for two, I wouldn't even day trade the equity because you got to put up like $3,000 just to buy one share. To me, that's outside of my price range, but I'm just using this as an example. So if I'm in this and I have bearish sentiment, and say I got in at 10, the option contract was 10. If I can get $1 move lower to say 9, that would be my exit. Now, again, based on your technical analysis, if you already have your stop loss established of 30 to 40 cents, you can continue to ride this momentum. You technically don't have to get out of that stock price. And I guess in advance, as you become more advanced with this, what you will start to do is you'll start to scale out of your position. And what I mean by that is, say you buy 2 or 3 contracts, as the stock moves in the direction you want it to go, say you want it to be bullish, and as the price is going up, you'll start selling those contracts one by one. So you'll get out of one position, and then what you'll do, you'll adjust your previous stop loss, you'll move it up or down based on the current price movement. So for example, if you got in at $10 and you set your stop loss at $9.50, as the price goes up to 11, you will go ahead and sell one contract, and then you will take that stop loss and move it up to like 10.50, 10.75, 11, right? That way you protect whatever profits you already have. So if it does come back down and breach 11, you're out and you're clean, and you're not, I guess, getting caught, quote unquote, holding the bag until it gets back down to the $10 point. Does that make sense?
Yeah, that's perfect. 2 things. Can you show, so the first question is, can you show how you got there to that options chart?
Yeah.
And then the second thing was, for day trading, how many open positions do you have at one time, since you have to monitor it closely?
At one time, shit, man, no more than, I'm only trading, I'm only taking a trade at a time. So even though I may trade 3 to 4 trades per day, I'm only ever in one trade at one time. So even if I'm looking at, say, Boeing, and go to the lower time frame. And remember, I only trade off the 2. I base my entry points based off the 2 and the 5 minute charts. So if I have Boeing up on one side and I have, say, Apple up on the other, even if I see a movement based on pre-market, what my pre-market analysis would be, I'm not taking both trades at the same time. I'm only going to take one. So, because what happens is you will get lost trying to look at both of these trades, and you could miss your exit if you're focusing on one and not the other. So exactly. For me personally, I only do one trade. I only enter in a trade at one time, and then I'll move on to the next. Like for this Boeing trade, once I got in and once I exited, I'm done with it. I don't even look at it anymore. I take it off my screen and I'll move on to the next ticker.
Mm-hmm. Because you'll be in the middle of selling the trade and something else will be popping, and by the time you sell it, you'll look back at that other trade that you was in.
Yep.
And be like, hold up, it just hit a high. What?
Yep.
Damn. And it dropped already. What?
Exactly. And you'll miss the move trying to do
Yep.
two different things at one time. I mean, unless you take like the limitless pill and you got like extreme mental focus, like you could do it. But when it comes time to like day trading, that's why one of the first things I said, man, like you don't want to have any distractions. You want to put your phone on mute or do not disturb, and you want to be in a nice quiet area, and then just grind it out.
Man, they too young to know what the limitless pill is, man.
Oh, dang. Oh,
but
man.
Can you so I believe it was Ebony. She asked
where'd I get the option thing from?
Nah. So she did ask that. She did ask that as well. Okay. But after you do that, can you show, I don't know if you can show it now because you probably don't have any open orders, but if you can go to the trade tab or monitor tab and show how you set a stop loss, like actually you set it and not just an example of it.
Let me see. I don't even, that's the one thing
I know I don't have any open orders. I would show if I had my open orders up, but I don't have any open orders.
I don't have any open orders at all. And also I only use Thinkorswim for charting. I use day trading. I use E-Trade for all my day trading positions.
Same here. Same exact thing. I only use Thinkorswim for charting and day trade.
That's it.
And swing trade or whatever on E-Trade.
And for those of you who think it's kind of like difficult to learn, I guess Thinkorswim, it's not. And they have a robust education center. As a matter of fact, they have a workshop coming up, and I'm going to put this in the chat. Let me find, where's the damn thing? Let me find this. Let me put this in the chat. All right, this is the workshop they have coming up for it. It starts on the 26th through the 29th. It's an hour per night. You can just go in here and register, and they're pretty much, I mean, Thinkorswim is very robust. So they break it down into little clusters, and they'll tell you, how to navigate, and you'll learn everything you need to know with regards to how to navigate the Thinkorswim platform. Let me just find out. Let me see how I can put this link in the chat. So that way, if you want to register for it, you can go ahead and do so.
Ebony, can you do me a favor? When he puts that in the chat, can you put that on Facebook? Thank you.
Yeah, they have all type of webinars that you can sign up for. Like they do options, they do technical analysis, they do a lot of stuff, and it's all free. So you don't have to pay anybody to learn this stuff. Now, as far as how I found how you pull up the option chart, if you're in the Thinkorswim platform, I don't know how to do it on Robinhood or anything else. Just go to the trade, and then what you want to do is when you get to the option chain, like say you're looking at the weekly expiration of the 19th and the strike price of 347, what you want to do, you just anywhere in here, you can just right click it and then click on copy where it says copy.spy201019C347. You copy that, then you go back to your charts, and then you just paste it in there in the ticker box, and it'll pop up for you. And this is what the option chart looks like. And one thing I do, I go to the studies and I remove the theoretical option price. I don't care what theoretically it could do. I need to know, I just need to chart it out. I just need to see what it looks like as the day progresses. And that's how you pull up the chart for the option.
So I believe, Joey, to answer your question, so his question was, what's the benefit of using 2 different platforms at one time? So for me, I like to use Thinkorswim just because I like the way their charting platform is. I personally think it's easier to use than E-Trade, and I think it looks better. But on the same token, for E-Trade, I like the way their app and their website is. It's a lot easier and user-friendly for me for options, and then for getting in and out of trades and all that other stuff. So that's why I use E-Trade for actually getting in and out of trades, and that's why I use Thinkorswim for charting. What about you, Coach?
Ain't the same reason. I pretty much need my entries and exits to be precise, and I need my orders to be fulfilled as soon as I, place an order, whether it's a limit or a market. So that's why I prefer E-Trade. And also the charting on Thinkorswim, just this whole platform is just so robust, and that's pretty much the main reason why I like it. Why I like to use two different platforms.
So can we use the option chart thingy to see the history of the option price since inception?
Yep, we sure can. How do I minimize this? Oh, let me show it. Hold on, give me a minute. Yeah, so what's XLK? That's one that Mark looks at all the time, right? Go to the higher time frame, monthly. So go back to trade, XLK. You select it, then you just go down to whatever option chain you're looking at. I think everybody's on what, the 130 strike?
Yeah.
Yep, then just right click it, copy, go back to the chart, paste it. It's here, but remember, when did it come? It just came on the market in what, September?
Yeah, like last month, or last month or so.
So this is the price history for that option. Or this is a chart for it, rather.
So I think a lot of people think history of a option is going to show, if I was to show this 130 2023, it's going to show me everything from now until the day it first came on the market. Like XLK first came on the market like 10, 20, 30, 40, 50, etc. years ago. No, so it's only going to show you when that actual option chain came out. So if you go back to trade and then go to 2022 165. How long is that? No, or that's cool. Hold on, let me see when mine was. Was it 2022 or 20? I believe it was. When was that? When did that first open up? What was the first one on that one? September? No, can you go to 2021 then?
Okay.
Because if y'all look at this will show you exactly when Mark was talking about how he got into certain things, or go like the 140, how he got into all these trades, and we're looking at him like, dang, how you make this much money? He bought 25,000 contracts, XYZ, blah, 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 at 40 cents. And then he sold it at this. Like, this is how. So look at this. When it first came out,
it was 4.
You know what I mean? And
wow.
Look at what the high was.
Wow.
And so that's what y'all got to look at, right? When we're getting into these trades. And I know we're day trading right now, but just to go off of the history of it and why we all came here together for actual long-term investing, which I still personally think long-term investing is key. Yes, we need day trading. Yes, we need options. But at the end of the day, personally, you need your long-term investments as well. and that could include your options. But 4 cents to $5.60, that's a bag right there. Like, that's a beachfront option course, condo, or house, or whatever. Like, that changes your life.
Yeah.
So when Mark says, I just bought, let's say I bought $25 million worth of, or let's just bring a small number. I bought $10 million worth of XLK. Can you hover over that 4 cents? See what that date was?
This was
May.
Yeah.
May 1st.
May 1st.
I bought $10 million worth of XLK May 4th, May 1st. And can you go to the top of the green candle, the big one.
Right here.
And let's say he sold it. Actually, you know what? Keep going. Go to 5. Go to like in the middle. Right at $5 on that one. Keep going up. Keep going. Boom. And that's where he sells it. Because it's like, you know what? This is getting overextended. That September 1st, quad witching about to come up. I'm going to just take my profit. I'm Gucci.
Yeah.
Like, you see how much he's making, and yo, it's crazy.
It's crazy because he got it at 4 cents and then went up to $5. Oh my God. That's well over 1,000% return. Oh my goodness.
Yeah.
That's
So
crazy.
this is the stuff where he's like, yo, y'all can go ahead and do the research on your own. And y'all can figure out when he's telling us, yo, this is where I got in around this time. This is where I got out around this time. Blah, blah, blah. This is what I made. That's from May to September, yo. Literally May 1st to September 1st. Right there.
Yep.
And think about, yo, you just spent $10 million. We just gonna throw a random number out there. $10 million on this. At 4 cents per contract times 100. What's that? Per contract.
That's what, $40.
So $40 a contract. $40 a contract. You do 10 million divided by 40. You getting at least 250,000 contracts right here, and you selling them for $5 in less than 6 months, just because you're happy with your profit. So this is the stuff that he's trying to teach us, the stuff that Coach trying to teach us. Like, once you start understanding all this, and we get to the point where this all makes sense and we can look at things in a different level, yo, the world's gonna change for us, for real, for real.
Mm-hmm. For certain. Let me see. Somebody asked how come it was so low during that time period. So I mean, if you look at the chart, look at in May when he bought it, it was around, the stock price was around here. What is this? $91.
So
Yeah.
I'm not saying that he did this, but I'll say this: if he bought that if he spent $10 million on that and he sold it for $125 million.
That's crazy.
If he bought $10 million worth of that contract and sold it at $5.
Yep. So this would have been the entry point that corresponds with the low of this option call. And then he just rolled it all the way up. And this was your exit right around September. Wow.
That's why certain people don't have to charge for you know what I mean? And then see, so I'm not, I promise you, I'm not trying to rag on nobody's hustle. I promise y'all. I'm not. But what I am saying is you have people like Mark who, if you were to take $125 million and divide that by 365, that's $342,000 a day. A day. Let's divide that by 24. That's $14,000 an hour. Divide that by 60. That's $237 a minute. So imagine if he really wanted to charge us for something, right? Think about how much he would have to charge us that would actually be worth his time.
Yeah, it would be out of my
It
price.
would be an astronomical amount. Like none of us, well, I'm not gonna say what y'all pockets looking like. I know me. Hold on, let me turn my camera on real quick on here. I know personally for me, like I can't afford that. I can't afford $85,000 an hour. I can't afford $14,000 an hour for something like that. So I take it and I run with it. If you gonna give me all this game for free, come on now.
Yeah,
I'm taking it.
Yep, I agree.
I'm taking it. Like I'm sorry. And then you can't get mad like everybody that's charging. You can't get mad like, yo, why are you doing it for free? Why not? I can afford it. Like I can literally afford to give game to everybody in the world for free.
Yeah, he said it on multiple occasions that he doesn't need our money.
Facts. And this is off of one trade. If he does that, you know what I'm saying? Like you can look at it even at like a smaller scale. Like let's say he did 5 mil. Like if we really look into the way Mark trades and study the way he trades, and you take, if y'all go back to the video where he was on with us, I think he said he spent, or he bought like 25,000 contracts of whatever, and then we did the math. It was like $3 to $5 million.
Mm-hmm.
If you actually look at the way he trades, he's spending anywhere from $1 to $10 million a trade. So if you think about it, like, yo, if I'm going to go ahead and I'm spending this amount, think about how much he's making. Like everybody's mind was blown off of the $18.2 million loss.
Yeah.
Everybody's mind was blown. But when you actually look at it and you see what he's done, you see like, yo, 18.2 million ain't
nothing.
It's
a drop in the bucket. I mean, it hurt.
I'm sure it did. I'm sure it was probably like a paper cut. He was like, yeah. Yo, somebody give me a Band-Aid.
Right. But I'm certain that was not his entire account balance at all.
Exactly. That was that, like what you say at the beginning, you was like, you risk what, 20%, 30%?
Yeah, I was 20% of my account balance for each trade.
I'm sure that was probably way less than 20, 30% of his balance. Mm-hmm. Like, and then he talks about the 70-30. Like we're on a different level, and this is not a jab at anybody. Also, we're trying to figure out how to get to the 70-30 split, right? People need to figure out how to get to a 50-50 split. Like real talk. Like people are out here at I save 30% of my money and I spend 70%. Or I can save 10% of my money and 90% goes to bills. But yet we're hanging on a word that people are saying like, yo, I got to get to this 70-30. I got to get to this 70-30. But you're not realizing like, yo, you can't just jump off the edge that fast. You do that, you're guaranteed to fail. I promise you. Guaranteed to fail. Like if you really go out here and be like, yo, this month, $3,000 go to bills, $20 goes to my pocket, $1,000 goes to investing, and then you like, yo, the very next month, I'm putting $3,000 in my savings. It's not gonna happen. I'm sorry, it's not gonna happen. You can't just flip the switch like that. You gotta ease your way into it.
Yeah, facts.
Like, and it's the same with this day trading thing. It's the same way with options. It's the same way with getting in the market. Like, if you haven't done it before, you can't just go head first and dive in. You know what I'm saying? You're not Trey Songz. I'm about to dive in. You can't do that. I'm sorry. I'm sorry. Like, ease your way in.
Yeah.
I promise you. Because if you don't, you're going to fail. And when you fail, it's going to hurt.
Yep. And you definitely want to go ahead and establish a criteria, and also know you need to learn a couple of things before you even attempt to day trade. Like one thing I don't do that I used to get caught up in a couple of years ago, I used to go in these Facebook groups, and when somebody makes a post like say, oh, Hertz is at such and such and is doing this, I would blindly take that trade without even charting it out before to check my technical levels. So I would just buy it based on some random person's recommendation, and I got burnt like that a lot of times. So what I had to do is I had to, I guess, get out of these Facebook groups, get out of these Slack groups, and actually learn my candlestick analysis, my technical analysis, my chart patterns, the moving averages and how they relate to price action, et cetera, et cetera. And that's how I kind of figured out and minimize my risk and maximize what my reward is going to be when it came to intraday trading. So once you get that framework, or once you establish that foundation, then what you need to do is move on to the practice stage, whether that's being, you know, using real money, or whether it's paper trading. Like TD Ameritrade Thinkorswim has a paper trading function where you can kind of like practice, and as you get better, then you can transition to using your real money. That way you don't end up blowing up your account just blindly trading. That's one thing I would not recommend anybody do. It's just, if someone throws out a ticker and I want to advise you just take that trade without you first charting it out first and seeing what the sentiment is for that particular stock. That would be my advice for you. And if you're going to sign up for any sort of like indicator service, like where they say, hey, buy this stock because it's going in this direction, if that service does not give you your entry point, if it doesn't give you your take profit point, and if they don't give you your stop loss point, I would strongly advise for you to cancel your subscription to that service, because they're selling you short. They should at least give you those three things at minimum. It shouldn't be, okay, buy Apple at $200, hypothetically speaking. Well, what would my stop loss be? What would be my take profit point? You don't just tell me what the entry point would be and not give me everything else. So yeah, we got any other questions?
have a question. So in the learning process, or let me just back up. Your experience, if you guys have been trading options, have you actually seen anything that low that you just did as an example that's worth future investigating and possible entry into? Because
when you act, you referring to intraday trading, or are you referring to
options.
long-term investing? Well, so I'm gonna give y'all a gem right now. So one of the tickers that, like, say you have, I'm not saying this is you, I'm just talking in general. Say you have like $1,000 to start off for day trading. One of the tickers you want to use is SPY, SPY. And let me show you why. So when you're looking at these weekly options for SPY, drop this down. You can see that it's quote unquote relatively cheap, right? So if you're starting off with $1,000 for your day trading and you're trying to purchase this 348 strike, you're only spending $100 per contract, as opposed to you trying to day trade Amazon or Tesla, et cetera, et cetera. This is more advantageous for you for people with smaller accounts or with large accounts too, because one, it has a lot of volume. For two, it's not expensive at all. And for three, you can get a lot of moves higher for like 200, 300, 400% in a day trading the SPY. Easy. And this is one that I put on my list, and I trade this religiously. So that's kind of like one of these. Yeah, this is definitely a stock I recommend people start to learn if they're going to buy options for day trading. Learn the SPY, learn the movements, become intricate with it, learn the levels, learn your chart pattern analysis. That way you'll know, hey, if I get in at 348 and that bad boy moves to 350, I got over 100%, easy. So if I bought 2 contracts at $200 and it went 200%, I just made, what is that? What, $600? Quick. All within a day.
Okay, thanks.
All right, my bad, bro. My phone died. But yeah, I'm back.
Yeah, no problem. I just gave them the SPY. This is one of the options or tickers that I trade religiously, because it's very liquid, it's cheap, and you can get significant gains, and you can get significant losses too if you don't, have proper account management. Meaning if you don't, have your stop loss in place, et cetera, et cetera. But this is a good one to trade if you want to do this.
Yeah.
This is
my mentor, the dude that taught me about options, not Mark, but another dude that taught me about options, my frat brother. He trades the SPY a lot.
Mm-hmm.
Somebody asked, can we plot support and resistance lines for the SPY?
Yeah. It's already plotted. You can tell.
Oh yeah. So that's another question. Another thing. The PDT rule.
Uh-huh.
So can you explain that to people? Because a lot of people, if people take what you're saying to heart and start learning how to day trade and don't have an account balance of 25K,
mm-hmm.
and then don't have a margin account,
mm-hmm.
and they hit that 5 limit
mm-hmm.
in a week.
Yeah, it's really 3.
Oh, 3 in a week.
3 in a rolling 5-day period. 3 trades. That's all you get.
Yeah, they're gonna be hurt.
So yeah,
so PDT is, I'll let you explain it, but PDT is the pattern day trading rule. So go ahead.
All right. So yeah, it's pretty much you only get three trades in a rolling day period, in a 5-day rolling period, if your account balance is less than 25,000. Now, the way around that, I'm about to give y'all another gem. The way around that is, 1, get a cash account if you're going to do it, whether it's with, you know, whatever broker you decide to use, whether that's, you know, TD Ameritrade or E-Trade, get a cash account. And then another gem I'm about to give you is if you day trade options, and this is why it's so, I guess, favorable for you. If you day trade options and you don't meet that $25,000 limit, go ahead and sign up with E-Trade. What you want to do is seek approval for level 2 options. And then once you're trading these options for day trading, there is no quote unquote pattern day trading rule when you're trading options. So what I mean by that is for cash accounts. So if you're in a cash account and you're trading options, for one, your cash settles that same day or the next day rather. So if you buy a stock option, say Friday at 9:30 or 9:35 a.m. and you sold it at 9:40 a.m., your money is going to be settled by the next day's trading, by the opening of the next day trading. That's if you're using options. Now, if you're buying the stock equity, your money may not be available to trade until maybe 2 to 3 days. That's how you can avoid the pattern day trading rule, by having a cash account, not using margin. And if you really want it to be favorable, where you could use all your money every single day, you will want to trade options only for day trading, because your money is going to settle that same day and be available for you at the opening of the next trading day. Did that make sense?
Yeah. Another question. So if you were to get in the trade on Thursday, are you still using that same week?
Yeah.
Options chain.
Yep. When I'm day trading, I'm not going further out than the current week's option chain. So for the SPY, relative to price action, say, I don't know, I'm looking at the chart, says the price is at 346, and I can see that it can probably go up to 348 or 349. I'm gonna buy as close to the money as I possibly can. So I'll buy like maybe 346 or even a 347 option price, but it will be that week's expiration. So if it's on a Monday, then it will be that Friday expiration date. If it's on a Thursday, same thing. I'm only gonna buy the expiration for that current week, because when you go further out, what you're doing is you're paying for time. And when it comes to day trading, you don't care about time because you're looking to get out of your trade within 30 minutes. So it doesn't make sense to pay for that extra time.
K with 1Y asked, do you have to have 25K in cash or just a balance of 25K and over? Just so if you have actual stocks and stuff in your account and you have cash on the side and everything totals over 25K, you're good.
Mm-hmm. Correct. Lily, you asked who's buying a contract end of a day. I guess, the non-political answer would be an idiot. But I mean, people are buying these contracts, like, especially the SPY. People are just moving in and out of these contracts all the time. There's been plenty of times where I bought a contract at 3 p.m. on the SPY and then just sold it right before close. It's always movement within the SPY or any other liquid stock. But who's buying it? I don't know. I have no idea who's buying it or why they're buying it. But I just know I can get out of my position based on this volume. There's always buyers and sellers in this, especially in this ticker.
Can you pull up RUN? Ticker symbol RUN.
On the chart or on the option chain?
Option chain. November 20, 2020.
Okay.
Then it said, where do you see that, K? So K said RUN 2020, ADJ 34 days. What does the ADJ mean? I don't even see it.
Yeah, I don't even see it. Let me.
close that. Like, we'll collapse that one. What you talking about, K with two Y's? Unmute yourself. You've been unmuted.
Okay, Troy. Okay, so you see how they have two lines for the November 20th? Both have 34, but in Fidelity, that second row got the ADJ. I copied and pasted that because I trade out of Fidelity. So I didn't know, because a lot of them have two rows for the same strike day. Expiration date, I mean, November 20th, November 20th. Why two?
One is a weekly option, one is a monthly. So this one up here is a monthly, this is a weekly, basically.
Okay, so I still don't know what that ADJ means in Fidelity.
The ADJ, I have no idea because it's not on my layout. Let me see. ADJ. I don't
No,
know.
it wouldn't be right there. It was right there outside of the expiration date. It was right beside it.
So it's probably where, if you collapse that, it was probably right after the 100.
Yeah.
Oh, okay. Yeah, I don't know.
The only thing, so is that the only one that it said ADJ on?
Yeah, that's the only option I've seen like that. And I came back out of it because I didn't know what to do.
So I forgot what the options were, but some options don't actually have 100 shares in them. You know what those are called? I forgot what they're called. But
yeah, I don't know the technical term, but I see where you're going with this.
So it could be that as well. Letting you know that some of these options don't have 100 shares in them. Why do people buy the ones that don't have 100? Exactly. Thank you, Sabrina. So it could be that. So the adjusted options could be, I believe that might be it. I don't know. I'd have to look into it, but some don't have 100 shares in the actual contract.
Yep. Somebody asked about volume. You said you like a 500K volume. You haven't seen that so far. So yeah, the volume is in reference to the underlying equity that I'm looking at. So for example, if we're looking at the SPY, if we go down to the day, and you see down here where the volume is located, if you see where the cursor is and you look to the left a little bit, you'll see this volume is 89 million. So there were 89 million transactions that occurred on Friday, the 16th. Now, what that means is, since it's red, that pretty much means that the sellers were in control of that day. So there were 89 million transactions. You just don't know the split between how many people bought or how many people sold, but you do know based on the color that it was more selling pressure versus buying pressure. So when I say volume, I'm referring to the actual movement of the underlying equity. Do I redo my line? No. So normally what I do, if I'm looking at a new stock, like say Netflix, I'll go ahead and chart this out, on the monthly, then I'll drop it down to the weekly, then the daily. And then as the days progress, that's when you'll see more lines on the chart like the SPY, because I'm making annotations based on, pre-market analysis, and also just based on support and resistance within those price levels. So if I drop it down to a lower time frame, say the 15-minute, you'll see and hear how I make my annotations. Like, okay, I know if it drops below this weekly, it can go down to this level. Right now, all this stuff looks like, a hodgepodge, but once you learn like technical analysis and support and resistance, it'll be easier for you to kind of like identify what's actually going on with regards to intraday trading. But no, I don't clear it out every day. I just leave it up here. So I'm used to it now. I'm used to knowing what the levels are. Do I use stop market or stop limit? Stop limit. The stop limit is the predetermined price point that you've already established based on your technical analysis. The stop market is based on whatever the market price is going to be at that in that particular snapshot in time. Hammer candles. Yep. So a hammer candle is basically a reversal pattern. Whenever you see that, there's a high probability that whatever price action, whatever trend is going in, you could pretty much, I don't want to say guarantee, but you have a high probability that the price action is going to reverse. So looking at the SPY right here, I already seen one. Hold on. Looking at this right here, let me bring my oval. This is a hammer candle. You can clearly see before the first candle that came in on the 15-minute chart time frame was bearish. Then we see this hammer candle become established. Whenever you see wicks down here like this, that lets you know that there are buyers down here. And on the flip side, if you see wicks at the top of a candle, that lets you know that sellers are up top. So whenever you see this hammer candle, it's a good sign that the trend is about to reverse. And as you can see on the 15-minute, it came down, hammer candle formed, and then it reversed to go higher. Let me drop it down to what day is this? The 8th. Let me drop it down to the 5-minute. You'll be able to see it more clearly. Go to the 8th. Boom. It was in the downtrend. Hammer candle came in and then pushed prices higher. Jeremiah, do I set both prices the same? No. It just all depends on, no, I usually just stick with the stop limit, but I don't use both. I don't use the stop limit or the stop market. I usually just use a stop limit.
Excuse me for interrupting, but that's not what I was trying to get at though.
Okay.
I use on TD Ameritrade, and when I set my stop limit, if you look at the option chain and try to do it, there's 2 prices to set. Like if you right click on the bid, all right, maybe not right click. All right, click like you're gonna do your stop loss. Left click.
Oh, so I don't even. So again, I don't.
Oh yeah, you wouldn't be able to show a stop loss right now if you don't have a
open
contract in.
I have it open right now on my computer. I just clicked the bid and it opened up. But yeah, I don't know why yours ain't doing it. Well, it's still. I don't know why yours ain't doing it.
Hit custom, like buy custom. No, okay.
No, I just click on the bid and it opens up. Like I wanted.
Is it something that you already have open?
Yeah.
Are you open?
No. I'll open file. Hold on.
Are you on the actual website or the Thinkorswim platform?
I'm on the Thinkorswim platform that I trade on.
That was right. You just hit buy custom and then go to order, cancel, order, bracket. And then that'll give you all 3 entries.
Y'all use E-Trade. I use PD. So when I set the stop limit, it has 2 different prices to set. One of them says LMT and the other one says STP.
Yeah, so go to buy custom.
Okay. I like it. I don't see the custom. Oh, buy custom. All right. Gotcha.
And then OCO just means order, cancel, order, bracket. And that should give you the 2 different limit versus stop.
That's totally different from how I do it. But all right, I have to work on that one. All right, I do it different from that, but
Okay, cool. Lily, do I use the 1 minute? No, I don't use the 1 minute because it's too noisy for me. I base my entries off the 5 minute and the 2 minute time frame. That's how I know when to get into, you know, whatever option I'm trying to purchase based on the technicals of the chart. But I never use the 1 minute. So between, I would say 9:30 to about 11 a.m., I will use the 2 minute and the 5 minute. As the day progresses to around 12 to 1, I would then go to a higher time frame, like the 1 hour or the 30 minutes, just so I can view how it's trending, whether it's trending up or if it's trending down, or even if it's going sideways. And that's how I kind of use, the time frames. But I never use the 1 minute. That's Eastern, Chris. Eastern. 9:30 a.m. Eastern.
When watching lives, I see others that are paying for charts, like Benzinger Pro, TradingView, bar charts, How important is it to pay for charts? Does it really help you more than what's given for free? I use Thinkorswim. I don't pay for anything.
Yeah, when you mean pay for charts, you mean like learning how to do technical analysis and understanding chart patterns. Is that what you mean? Because if that's the case, then yeah, in a sense, you got to find somebody that's trusted. You got to find someone that's trusted and who actually trades day to day. One person, and just personal use. Me personally, no, I don't. I don't see the value in it because once you learn chart patterns and technical analysis, you can feed yourself. That's the whole goal, learning how to fish and feed yourself. You don't need to pay for anybody to chart something up for you. Now, if you want to just get predetermined charts for like swing trades, you can go to FinViz, FINVIZ, and they have a lot of charts that you could use based on your established criteria, and it'll pull up the charts for you. You can do that, and that can cut down on how much time you spend searching for charts or for stocks. That's a shortcut you could use.
Yeah, but still, even with that, you're still going to pull it up on your own chart and look at it. You know what I'm saying? So just looking at the chart, that's pretty much K with 2 Y's. That's pretty much saying like, hey Ty, can you give me a chart, and you're just gonna take my word for that chart. Like, you're not gonna do any research on your own on that one. So you're gonna want to look it up. So personally, I say stick with your free platforms that give you charts that you can create your own lines and all the other stuff on.
Yep. Because it's important for you to know the levels and where you could potentially take your profit point at. And you're not going to learn that until you chart it up yourself.
Any other questions y'all have? So I was going to give my little portion, but I mean, bro, I think you hit everything on the head, honestly. Everything you said, I do. I will say that sometimes if I'm not feeling as aggressive, I will have my expiration date out further and I'll swing trade it. Mm-hmm. So I'm like a mix. If I don't really care about the day trade, I'll have a swing trade mentality and I'll have a longer expiration date. But if the stock, does run and I see my profit that I want, I'll sell it that same day and I
Yep.
won't hold it. But no, so I have nothing to add on it. Recommended sources for learning chart patterns. What sources do you have for that?
For free sources, again, you could just check out TD Ameritrade. They have a lot of platforms here. They have a lot of webcasts that they do every single day. Like this one right here that's coming up on the 19th. This person, who is this Cameron May, he's going to be teaching you a beginner's guide on technical analysis. You can jump in that and watch it. Etc. Futures, you want to learn futures. Whatever you want to learn, you can get all this stuff from Thinkorswim for free. Now, if you want to do something that's more, I guess, personal, or you feel like, you want to pay for a course, the course I would recommend is the Profit Room. I recommend them for sure. And you can find them on Facebook. And I think they're on Instagram too. Yeah, the Profit Room with Ernest and Latoya. These are two people who day trade and swing trade equities and options and futures and Forex every single day. Like there's no fluff that you're gonna get from them. And the Profit Room is pretty much where I learned damn near everything we just discussed today. Now, if you want to go in depth with it, like with, again, understanding candlestick analysis, the patterns, what they mean, your technical analysis, your uptrends, your downtrends, support and resistance, your levels, your chart patterns, your double bottoms, your inverted head and shoulders, etc. And if you feel like you need to pay for it, I would strongly recommend the Profit Room. Now, I'm not a part of any affiliate program. Just to be clear, I don't get anything by you using this platform, but this is just one that I learned from and I strongly recommend if you wanted to go the paid route. But if you want to just stick to the free route, yeah, man, just go to TD Ameritrade. They have webcasts and webinars all the time for free.
Any other questions? And somebody said they're on YouTube as well.
Yep, they're on YouTube, they're on Facebook, Instagram, and they trade every single day. They do not miss a day where they don't trade. So that's why I recommend them, because they're actually trading with you. It's not like, okay, I'm gonna never mind, let me stop.
Any other questions y'all have? All right, I'm about to stop.